The S&P 500 and NASDAQ hit all-time highs today. There's nothing else to say, nothing else to teach, nothing else for you to learn. Don't need more books. You don't need to go look at the galaxy and see how Orion lines up with Chichen Itza in Mexico. Execute and buy. That's it. The entire thing. You can close out after this. We don't close out for the views. But 2 Tech, S&P 500 or QQQ, IWM, IWF, 2 index funds, and 2 technology companies. I love Apple and Microsoft because they provide safety. Okay? Write that down. For those of you who are new, 2 index and 2 tech. And the truth is, most of you don't want gains. You just want to gamble. And some of you have even gotten off the gamble coins that have been out there. But if you want security and safety, this is one of the easiest plans that you can follow. The hardest part about it is most people never follow a plan consistently year after year or week after week when it comes to investing. The top lesson from last week's episodes, kudos to Jorge, who's in Dream Team now because of his win. The formula for explosive gains is this. You need a high amount of shares in a company that you love or have a deep conviction in. You have to hold it for a long period of time. Luckily for him, it didn't take that long, but you have to hold for a long period of time, and then you need a high volume stock that other people are behind. Please write that down, because what sucks is when you get into a move and it has a tremendous run and you don't have that many shares in it. So these are the 7 lessons. I talked with a brother this past Saturday. Stock Club members, you guys will have that in about a week or two. And he made $230,000 on AMC. Lesson number 1, super concentration. He only has 6 stocks in his portfolio. Truth be told, you cannot do an adequate amount of research on 29 assets in your portfolio. You can't. 6 maximum. 4 is ideal. The fewer companies that you have, the deeper you can go into them and understand them a hell of a lot better. Please put 6 in chat. Lesson number 2, he bought it in August. So before the hype kicked in on AMC, because he works in the music industry and he's a business owner, he goes around to a whole bunch of cities and he was like, I remember what it was like prior to COVID. So unless they absolutely go bankrupt and go out of business, I know at some point this stock will revive and come up a little bit higher. So he did actual on the ground, old school research and compared the data of how many people went to the movie theaters before and now that this country is opening back up a little bit to what it could be now. Lesson number 3, buy a large quantity of shares. Once a company has met your parameters and your expectations, you have to buy a large amount of shares to make the investment worth it. Lesson number 4, I think he started thinking about the position maybe a year prior. He's only been in it since August, not even a full year, but he was willing to hold it a year to see if it would even get to a point where it would break even in his favor. One of the biggest mistakes I see a lot of people make, you guys want to flip too fast. And it's often because we made bad money decisions prior. So now you want to erase 10 or 18 years worth of mistakes in 2 years. No. What happens is you'll hold something for a year and it'll take off and it will build your confidence to then follow a system in other areas of your lives. When it comes to money, money is all about systems, automation, and having an elite edge in something that other people don't have. Please put elite edge in chat. Lesson number 5, he used the previous high going back to 2016 of 35 as a potential exit price. He bought in at 4. So even if it never shot up to 70, he got in at a good price. And then almost had a multiple of 9. He's risking 1 to potentially almost make 9 on the investment. Is that a good risk to reward ratio? I'll tell you guys, minimum risk 1 to make 5, 1 to make 10, 1 to make 25, 1 to make 50. This is a good risk to reward parameter. Lesson number 6, change your mindset from working for money to letting your money work from you. If you're always saying, man, I'm tired of working and I'm tired of having to give all my time in exchange for you, once again, you have to let the greatest set of entrepreneurs to walk the face of the earth ever work for you. Are you better than Bezos? Are you better than Tim Cook? Are you better than Steve Jobs when he was living? Are you better than Elon? You have to factor these things in and say, if you're honestly not better, or even in this case, do you have better systems, infrastructure in place and an edge in your company versus another? If not, you need to invest your assets into those companies in which can win for you. And lesson number 7, you can make trader money from long-term investing if you have a sizable amount of shares. Everybody want to drag you down the lane of investing, and then I trade futures is what I do. I'll arguably bust damn near anybody's ass when it comes to trading, right? Anybody can lose. But the real leverage is to have the money and assets working for you. All the big money is in long-term investing. Here's how you know. You never see anybody that has a net worth higher of $50 million talk about actively trading, with the exception maybe of Paul Tudor Jones and maybe 65 other people. Type in chat, let the money work for you. If you own the LA Lakers right now, and I've talked about this before, if you owned, or if you had the chance to own, shout out to P and Migos album came out. If you had a chance to own Quality Control, would you own it for one day and trade it, or hold it for 10 years? I get so frustrated with people taking you down this aisle of saying we're all trades and you can make more money, but the downside risk, because if you're wrong one time and it skips your stop, then what? We have a parabolic day and we bleed down crazy and the volatility is incredibly high. Your broker may not even be able to answer your phone call. Go ask them if they're free first before you take advice from anybody. You don't got to listen to me because I'm good. Red Panda, Dream Team, good. Sniper's good. Execute. If I made you money, put yes in chat. Malls will adjust to becoming mixed-use spaces over the next 4 years. So you know, Forever 21 is dying a slow death in this. I've been a lot of slow singing and flower bringing for some of these retail companies, right? But they will start to use that space as commercial space, office space, and they'll get a lot more creative in some of the things that they'll do. I won't touch on this deep, but Russia has dropped the US dollar. Initially, it was a tax on the election. But we all know, in order to win a war, and at the end of Against All Odds, rest in peace Tupac, rest in peace Afeni, he had a quote. He said, now I have my money, right now I want war. In order to engage in war, you have to have a monetary edge on your competitor. This is why I kept telling you guys, if other assets that we are being driven into are not American, what downside risk does that have for us as a country and an economy? I won't tell you my theory on air. I told some of you privately. But if another entity, and there's another asset owned by another country, becomes the most popular asset to trade and invest in, what would that do to the dollar? And also, if electronic vehicles become the standard, and then we come off the dollar because of oil drops, then what happens to us? Death will be delivered. But everyone loves crypto so much. You have to think deeper. There's a game inside of a game.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.